All right, here is a sim on professional standards, because for each engagement, you've got to know which standards apply. And on a CPA audit exam, that's going to be a very big topic. They could ask you in multiple choice, they could ask you in a sim. So here's a sim dedicated to what standards apply to what engagements. So for each numbered items, you're going to choose which standards apply. If standards apply other than those in list 1, choose none of the above. So let's take a look at list 1, what we're going to be picking from. Starting out with statements on auditing standards published by the Auditing Standards Board. Well, you would choose that for audits of a non-issuer, as well as the interim reporting for that same non-issuer who gets audited. So in a non-issuer audit or a non-issuer interim review, you would choose the statements on auditing standards published by the Auditing Standards Board. Now, if that client were an issuer, then that audit and that limited review, that review of interim financial information, would be covered by the peekaboo standards. So if it were an issuer, not only would the audit be covered by peekaboo standards, but so would the quarterly review. The interim review would also be covered by peekaboo standards. Okay, then the statements on standards for attestation engagements, SSAE. Those standards apply when the CPA expresses an opinion, but it's not an audit. So this could be an examination where it's a high level of service. You're asked to gather evidence and provide an opinion. SSAE standards would apply. But SSAE will also apply when you're not giving an opinion. Engagements like agreed upon procedures engagements would follow SSAE standards. SSAE would also apply to your forecasts and projections when they're being examined by a CPA or when agreed upon procedures are being performed on a forecast or a projection. What are we talking about here? Forward-looking financial statements. So SSAE standards apply to forward-looking financial statements like forecasts and projections, as long as it's not a compilation. Because if it's a compilation, then what standards always apply? SARS. The next one down, statements on standards for accounting and review services. So if it's a compilation or a review on a non-public company that doesn't get audited, then we're down here in the SARS, statements on standards for accounting and review. And also included here would be a preparation engagement, that relatively new engagement where no report is even required. That would be SARS as well. Then you have statements on standards for consulting engagements, and those would be for consulting engagements. You might have to identify an engagement as a consulting gig and then choose statements on standards for consulting engagement rather than any of these other standards. And now if none of these standards apply, and this is a pretty complete list, then you choose none of the above. Now, there would be certain engagements where what's up here would not apply. So let's see what comes along, starting with question 1. So let's go to number 1. The standards that apply to historic unaudited financial statements or unaudited financial information of non-public entities. So this is historic, which means the financial statements look backwards. We're doing last year's. And it's unaudited. And the standards would be SARS, right? Statements on standards for accounting and review. Why? Because when historic statements that look backwards, if the CPA is engaged and the financial statements are looking backwards and it's unaudited, then it means it must be a compilation or a review. So the answer would be SARS, statements on standards for accounting and review services issued by the AICPA. Applies to these engagements regarding unaudited financial statements or unaudited financial information of a non-public entity. Now that's the key. Also, it's a non-public entity. Could a issuer, could a public company have one of these compilations or even a review under SARS standards. No. We said if an issuer has a review, it's under Peekaboo standards because it follows the same standards as the audit. But this is clearly in the question, unaudited financial statements, historic. This would be SARS. Number 2, generally accepted auditing standards for the audit of non-issuers. Okay, so now it's clearly an audit, and it's clearly a non-issuer's audit, so it's got to be statements on auditing standards published by the Auditing Standards Board. So we're up here. This is the answer right here. Statements on auditing standards published by the Auditing Standards Board. So generally accepted auditing standards for the audits of non-issuers are issued by the AICPA's Auditing Standards Board in the form of statements on auditing standards. So it wouldn't be the Peekaboo, it would be statements on auditing standards issued by the Auditing Standards Board. Number 3, the standards that apply to audits of government programs or organizations that receive government funds, money from the government. Those kind of companies got to get audited, and the auditing standards that would apply would not be what would apply to other companies that don't get such funds, but instead you'd have to know that audits of governmental organizations, programs, activities, and entities that receive government funds should be conducted in accordance with generally accepted government auditing standards, GAGAS, which would make the answer none of the above. Number 4, the standards that apply when a CPA performs agreed upon procedures on a client's financial forecast. Now, a financial forecast is looking forward, right? The company is trying to illustrate what next year might look like, and they're asking a CPA to perform agreed upon procedures on those financial statements, which means just the procedures that we agree upon we want you to do. Well, what standards would apply to that? That would be SSAE, attestation standards. So the answer is statements on standards for attestation engagements issued by the AICPA. SSAE standards apply to these attest engagements, engagements to provide assurance on representations other than historical financial statements, and sometimes the assurance is provided in forms other than an opinion. In this case, while no assurance is provided on any agreed upon procedures engagement, a report on the findings that lists the procedures is considered an attestation engagement and must be in accordance with SSAE standards, which is going to involve independence. So while we're going through this, you should keep in mind certain engagements you may not be sure whether independence is required. Well, agreed upon procedures always involves an independent CPA. The thing I love about agreed upon procedures engagements is that they're very predictable. The questions on the exam, very predictable, because the answer is independence is required for agreed upon procedures. SSAE standards apply, and no assurance is provided. However, it's still considered an attestation engagement. In the report on agreed upon procedures, the CPA would list the procedures performed and exactly what the findings were, and that's how the report would look, without any opinion or assurance. Number 5, the standards that apply when a CPA examines a financial forecast. Well, when you see forecast, projection, you're talking about forward-looking financial statements, and usually attestation standards would apply. They certainly would apply to an examination because that's a high level of service. You're giving an opinion now on the financial forecast. You're actually asked to provide an opinion on what next year's financial statements might look like, given the assumptions that are built in by management into those financial statements. Based on last year, we threw some assumptions in, and here's what next year should look like. And the CPA is asked to examine it. That's a higher level of service than agreed upon procedures. So certainly you're going to follow attestation standards, SSAE, because it's a high level of service and you're asked for an opinion. So the examination of a financial forecast is an attestation engagement. The CPA must be independent and evidence is gathered and reported upon, therefore attestation standards apply. Why wouldn't audit standards apply since it's an examination and you're giving an opinion? The answer is audit standards only apply when the financial statements are historic, when they look backward. See, in a financial forecast, the financial statements are looking forward, so audit standards wouldn't apply, but attestation standards would. Attestation standards would apply. So to wrap up this one, the answer would be SSAE standards would apply to an examination of a financial forecast or projection. Number 6, generally accepted auditing standards that apply to audits of issuers. Okay, so now it's an audit of an issuer. It's got to be peekaboo standards. There's nothing to argue about here. Peekaboo standards would apply to not only the audit, but also to the review, the quarterly review of that same issuer, done by that same CPA firm. So peekaboo standards, that Public Company Accounting Oversight Board was established in the Sarbanes-Oxley Act back in 2002. And peekaboo establishes auditing and related professional standards for independence to be used in the preparation and issuance of audit reports for issuers. Issuers consist of primarily public companies. Number 7, the standards that apply to a compilation of historic financial statements of a non-public entity. The minute you see compilation, the only standards that could possibly apply are SARS, Statements on Standards for Accounting and Review Services. I don't care if you're compiling historic financial information or you're compiling a financial forecast or a projection. You see the word compilation, the standards that apply, SARS, Statements on Standards for Accounting and Review. Not SSAE, but SARS. What else you know about a compilation? Well, independence is not required. The company has to be non-public because a public company could never have a compilation. Number 8, the standards that apply when compiling a financial projection. Well, once again, you see the word compilation or compile. You know it's got to be SARS standards. I don't care if the financial statements look forward like a projection or look back like a compilation of historic financial statements. Well, anytime compilation is here, you know it's got to be SARS, Statements on Standards for Accounting and Review Services issued by the AICPA. What's the difference between a projection and a forecast? Well, they both look forward. They're both forward-looking, what they call prospective financial statements. But a projection is based on a lot of hypothetical information about the future, whereas a forecast is based on more expected results about the future because we just had last year's statements, and based on last year, we'll factor in maybe a little bit of a growth rate, and here's the forecast for next year. But a projection is based on several, at least one or more hypotheticals, and that's why usually you hear that the projection is only available for limited use. It's got a restriction in it. And a forecast might be available for general use. But when you see the word compilation of a projection, we know, of course, it's SARS standards that apply. If, on the other hand, we were doing agreed upon procedures or an examination of this projection, then SARS standards would apply. And that's why we're doing this sim, because so much could come up here on the exam. First of all, you see compiling a financial projection. Do you have to be independent? Well, compiling, no. Compilations don't require independence. Even though you're compiling what next year might look like, you're still compiling it, so independence is not required for a projection or a forecast. All right, number 9, standards that apply to an engagement to express an opinion on management's assertion. Before we even read what the assertion is, what standards have to apply here? It's an engagement to express an opinion, and it's not an audit because it's a management assertion. Management's suggesting something. They want everybody to believe it. They're asking us to express an opinion on it. So that's got to be an examination. And we know that for examinations, the standards that apply are SSAE, Statements on Standards for Attestation Engagements. It's got to be this one right there. Now, what is the assertion? The assertion is that the square footage of retail space offered for rent by management is 100,000 square feet. So they want a CPA firm to come in and gather evidence and give an opinion that, yes, that's 100,000 square feet. Well, that would be an examination engagement, and that would follow standards of SSAE. We would have to be independent. We would be gathering evidence. We'd probably bring in some kind of an expert, maybe in square footage, and we would give an opinion, and that would require attestation standards, not audit standards, because this is not an audit of financial statements, even though we're giving an opinion. It wouldn't be audit standards. It would be attestation standards, SSAE. So SSAE applies. Expressing an opinion involves a high level of service, and since this engagement is not an audit of financial statements, audit standards don't apply. Since an opinion is being expressed, SSAE standards apply when audit standards do not. So if you're giving an opinion and it's not audited financial statements, then you know SSAE standards are going to apply. Whenever a CPA examines subject matter or examines an assertion made by the responsible party about the subject matter, SSAE applies. Number 10, the standards that require firms providing auditing, attestation, and accounting and review services to adopt a system of quality control. Okay, this means at the firm level, there are standards that require, if your firm provides auditing, attestation, and accounting and review services, and let's face it, that's 99% of firms probably, they must adopt a system of quality control. Well, the standards that apply to that are quality control standards, a separate set of standards, separate than everything else here, quality control standards. So the answer would be none of the above. So the answer is none of the above because the AICPA Code of Professional Conduct requires firms that provide auditing, attestation, and accounting and review services to adopt a system of quality control. Quality control standards relate to the conduct of a firm's attestation practice as a whole. A quality control system consists of policies and procedures designed, implemented, and maintained to ensure that the firm complies with professional standards and appropriate legal and regulatory requirements, and that any reports issued are appropriate in the circumstances. So the name of this standards is properly Statements on Quality Control Standards, SQCS, and they're issued by the Auditing Standards Board to provide guidance with respect to quality control at the firm. Number 11, standards that apply to a CPA performing advisory services to a client's board of directors regarding payroll outsourcing. So what are we doing here? We are advising the board of directors of a client if they should outsource their payroll or not. Well, it's just advisory services. We're just giving them advice on what we know about payroll outsourcing. This sounds like it's not auditing, it's not tax, so it's got to be consulting, because when you see advisory services, we're just giving them advice. That means the standards that apply would be statements on standards for consulting engagements. This would not be attestation standards because it doesn't say we're doing an examination or we're doing agreed upon procedures. So this is just a consulting engagement where we're not doing any audit-like work or we're not doing any tax-like work. Anything that doesn't fit neatly into one of those two is a consulting engagement. Advisory services fall under the category of consulting services, and therefore statements on standards for consulting services would apply. Consulting is the land of a million niches. So you might have to find and be able to identify a consulting engagement when you see one. And when you see the word advisory, that's how you know it's consulting. Number 12, standards that apply to an engagement to review interim financial statements of an issuer. Okay, you see the word issuer, you know it's got to be peekaboo. Now I know it doesn't say audit, it says review. Review, interim, issuer, it's still peekaboo. So that's the standards that apply. Even though it's not the audit, it's the other quarters that are being reviewed, but it's the issuer. So that's got to be peekaboo standards. Standards that apply to reviews of interim financial statements of an issuer are peekaboo standards. Number 13, standards that apply to a new preparation of financial statements engagement without the need to issue any report. Okay, that preparation engagement, it's only been around for a couple of years. What do you know about it? It's a SARS engagement. Statements on standards for accounting and review services. It's a SARS engagement. It doesn't involve any report. In fact, no reports allowed. You don't have to be independent. It's even less in service than a compilation because no report accompanies the engagement. So the preparation engagement is a SARS engagement. It's like you're handing the financial statements to the client right through their own QuickBooks portal. That would be a SARS engagement. You can also send those financial statements to anyone that the client asks you to without a report. That's a preparation engagement, and SARS standards apply. All right, 14, standards that apply to a review of interim financial information of a non-issuer who is required to have an annual audit. So now you have a non-public company that's required to have an annual audit, but we're asking about the standards that apply to a review of interim financial information of that non-issuer. Well, those standards for the review would follow the same standards for the required audit, and that would be statements on auditing standards published by the Auditing Standards Board. So a review of interim financial information of a non-issuer follows statements on auditing standards issued by the Auditing Standards Board. The theory here is that there's an annual audit of this non-issuer, and the other 3 quarters are reviewed using the same audit standards as the annual audit. While reviews of non-issuers typically follow SARS, that's because non-issuers don't require an audit usually, but they told us that this company did require an audit. Interim reviews of non-issuers that get audited follow the same audit standards for the interim review as the audit, which would be statements on auditing standards issued by the Auditing Standards Board. Hey, it's Darius. What's the fastest way to a CPA? Get on I-75. Go to cpaexamtutoring.com and click the combo special button and get all 4 parts until you pass